Hello everyone, good evening and welcome to today's session. So today we are going to start a new chapter, that is chapter number 4. Okay, before I proceed to the chapter number 4, I would like to just reiterate and re-emphasize the need of taking notes. So guys, these notes that we are taking while understanding the chapter will really help you at the time of exam. So I would request everyone to take the notes with me, okay, in your own format as the way you are comfortable, so that a day before the exam you are comfortable in revising the chapter. You should be able to understand what you learned in that particular chapter. Okay, so it is very important that simultaneously you take the notes, you prepare your own notes with me, and based on that it will be really easy for you to understand or revise the chapter a day before the exam. Number 2, if you have any doubts at any point in time, I would request everyone to ask that doubt. Whether it does not matter how much silly or small the doubt is. It does not matter that how many times you have asked that doubt before. No issues. Ask n number of times till the time you are not clear with that particular topic, that particular question. Okay, so keep asking so that you guys can have a good understanding of the topic. Okay, so in the last session we completed chapter number 3. Anyone has any doubt with respect to that chapter? Before I proceed to the chapter number 4, anyone has any doubt with respect to that chapter or any of the questions of that chapter or any topic per se? No? Okay, so you guys are pretty much clear till whatever we have discussed till now. Now, I hope you guys have read the chapter number 4. So, chapter number 4 basically talks about materiality, risk assessment, and internal controls, wherein we will be learning few things in depth. Number 1, we will be learning about risk based audit. We will be doing a deep dive in SA 315, SA 330. We will understand the internal controls, their framework, okay, and over and above that we will understand the components, okay, of, you can say, audit risk and internal control. So their components will also be, we will be looking into that. Before I start the session, can anyone tell me what is risk based audit? Like, the first thing we will discuss is a risk based audit. Anyone can tell me what is risk based audit? Come on guys, anyone? No? No one? Okay, I'll tell you. And I'll tell you with an example also. No worries. So, you guys already know what is risk. Can anyone tell me what is risk? Like, what do you think about when the word comes in your mind, risk? What is that? Anyone? The term risk. What do you think when that particular term comes into your mind?
Material misstatement in the financial statements.
Okay, good. Anyone else? Yes, Hemant, very good. Anyone? Okay. When I talk about risk, I'll explain this particular scenario with an image. Okay. So now if you see this particular image, you will be seeing a man standing in rain with an umbrella having holes. Now, this is a classic example which comprises everything in one image. I'll tell you how. If you see the rain over here, this rain is nothing but the risk. This rain is nothing but the risk. Now that risk and the man over here, you can understand that man has is a company, is an organization in itself. Okay, so he is the organization in itself. Now he is holding the umbrella with to protect himself from the risk. That is the rain. If I connect this umbrella would be for me would be your internal controls. So this umbrella is internal controls. Now these internal controls have some holes in it. These internal controls have some holes in it. Now what is the purpose of this umbrella? To stop the rain, to protect the person from getting wet in the rain. But what is happening here is that the umbrella is not working as it was expected to work. Are you understanding the point? The umbrella is not working, or the umbrella is not doing its job as it was expected to do, because it has some holes in it. Now, if that umbrella has these holes, like which is defeating the purpose of umbrella, what we call these holes? Can anyone tell me?
Deficiencies in internal control.
Yes, absolutely correct. These are nothing but deficiencies which are there in the internal control. Okay, so I would call them as a deficiencies in internal control. Now, some of the water over here, if you see, some of the water is getting basically, drenched down, like it is passing through the hole. Now, this particular water, which is, coming out of the holes which are there in the umbrella, is nothing but, you can say, your risk which is getting materialized. So this is nothing but your risk which is getting materialized. I will call this as a materialized risk, which later turns into a material statement. Or materialized risk. So this is how, when we say, a risk is there, that the rain will reach the person and the person will get wet, that is a risk. For that, he is an internal control, that is an umbrella with him. The umbrella, however, has some deficiencies which is not able to stop the rain appropriately. Means there is a deficiency in the internal control, and because of the deficiency, now what is happening is the risk is getting materialized, or there is a some of the risk which is escaping the internal control. So there is some risk left in the system, or which is going to the organization. Are you getting the point? And that basically is also known as, you can say, detection risk sometimes, or the control risk. We will understand that those particular terms. Control risk is something basically which, a control is not able to prevent the risk. It's a risk with respect to the control. Okay. And the detection risk is that the auditor will not be able to detect the material misstatement. So you can say this is a result. These deficiencies and the water coming out of these holes from the umbrella is nothing but a control risk. Basically, the risk that the entity's internal control are not able to prevent or detect or correct a misstatement on a timely basis. So there is some risk left. Are you getting the point? And if I add something more to this particular image, it is this rain is not only risk but inherent risk. The risk which will be there, okay, the risk that the misstatement will be there, the risk that the financial statements will be materially misstated. These risks, this particular inherent risk can be at the financial statement level or at the assertion level. We have discussed this part, that what is financial statement level and what is assertion level. When I say there are holes in the umbrella, it is not only the deficiencies in the internal control, but over and above that, this is example of a control risk. That yes, the umbrella is not able to stop, detect, correct, or prevent the misstatement, which could be material. And we will come to the part which is the audit risk later on. Clear till now? Any doubt with respect to this image? Any doubt? Okay, no doubt. I will show you one more image basically. Okay, now we will discuss this particular image on a higher scale to show, to demonstrate how in an organization things work. Okay, so I'm adding back some few more elements to this. Now, if you see this particular image, the umbrella is bigger because the level of internal controls that were placed are bigger, because we have now more number of people in the organization. The organization is a bigger. Okay, so this is nothing but a bigger organization. Okay, we have again internal control in place. We have again the risk of rain. Okay, we have again deficiencies in the internal control which are more bigger because of the size of the organization. The more the size, the more the chance of being higher deficiencies in the internal control. Now there are two more people which are on the top of umbrella. Can anyone guess who they are?
Fraud,
Part of the organization.
fraud, or personnel at the management, within the management, we can say that they are overriding the internal controls and creating opportunities for fraud.
Okay, good. Yes, you can interpret that way also. Like these are someone who are sitting or overriding the internal controls. Or another way to look at this particular image is these people are the ones, basically this person you can say is from those charged with governance, looking over the internal controls or oversight process or the deficiency in the internal control. Another person is, you can say, is an internal auditor who is also looking for the or who is trying to fix the deficiencies in the internal control in an organization. So they are those charged with governance, they are on the top, having a top view of the controls, the organization, and everything. He's pointing out and directing where to look and what to do. The second person is one who is looking at the carefully on the deficiencies. He's the internal auditor. Another way to look at the images. But yeah, good one also, that the person can be who's overriding the internal controls. Basically, this is how, a picture which demonstrates the example of an organization to show you that how the internal controls are, role of internal auditor, the risk, deficiencies in the risk, the risk which is getting bypassed from the internal control. So this is the risk which is getting bypassed from the internal controls, which is after is also there after internal controls. Now, our earlier question was, what is risk-based audit? Risk-based audit is something where an auditor understands this particular picture, understands where is the residual risk, where is the risk is there, after having all that stuff, after internal controls, after deficiencies, after, internal audit fix some patches, where is the risk, from where it is coming. Once that is understood, this is something area which is tested by auditor. Or when I say external auditor, area which is tested by external auditor. So what auditor does basically in this particular scenario is, they know this is a risk. Fine, risk is there. I know internal controls are there, but I will look onto the areas where there are deficiencies. So auditor will assess internal controls, okay, to identify deficiencies. Once he assesses the internal control to identify the deficiencies, he comes to know about the areas where the internal controls are not working effectively. For that, he will be testing those areas, okay, in a detailed way, means substantive testing. I call it below the umbrella testing, means I'll see from where the risk is flowing, where the internal controls are not able to stop, and I'll test those areas to understand whether there is a material misstatement or not. It is not necessary that the water which is flowing from the holes of the umbrella is dripping on the person exactly, like he's making the person wet. It can fall on the side. That is perfectly fine. Means although there is a deficiency in the internal control, but that is not impacting on the financial statement, or no one is exploiting basically that deficiency as of now. So deficiencies in the internal control does not mean that there is a misstatement. Understand that. Holes in the umbrella does not mean the person is getting wet. There is a probability, and the auditor will check that whether the water coming from that particular hole is getting the person wet or not. And that is the point we need to understand, and that is the risk-based audit. We need to understand as an auditor from where the water is coming, where the water is falling, which are the areas where there is a hole in the umbrella. For the areas where there is no hole on the umbrella, okay, the proper area, this one, the proper area, I'm fine. I am not required to do substantive testing on that particular side. For example, on the left hand side, if I divide this particular umbrella, if you see on this particular part, you have only one or two holes, but on this particular part you have major holes. The reason, because this is for the purpose, because in some areas you might have one or two deficiency in the internal control. So auditor, as an auditor, I will rely more on the internal controls. I will test less on the substantive side, means below the umbrella testing will happen less. But where there are more holes, okay, where there are more deficiencies, areas where there are more chances of being materially misstated, I will do below the umbrella testing more. I will do substantive testing more. And this is the whole approach, is the risk-based audit. I identify the risk, I test the risk. Clear? Any doubt with this one? Any doubt with this particular part? Understanding the basics of the risk-based audit. Yes, no? Okay. So you guys are pretty much now clear with the term risk-based audit and how it is relevant from the auditor's point of view. What is that? Okay. Now I discussed in the previous image some part of the risk, like inherent risk, control risk. Okay. Now the third part of the risk is an audit risk that we need to understand by this image. Now, for example, I will be testing all the areas, but it is because the holes are of such nature, or I may not identify that particular hole on a timely basis, or I may miss that hole, that the water which is dripping from that hole I may not see as an auditor, external auditor. So external auditor may miss identification of hole and does not perform testing. Okay. So there are chances that I may miss out some hole which is on lying on the corner or something which is not that much prominently visible, but there is a hole from where the water is dripping. As an external auditor, I may miss that particular part, or I may not test adequately below the umbrella because I never saw that hole. I missed out that particular part. Okay. Now, if I miss that particular part, if my testing below the umbrella is not identifying that particular water, or I somehow lost the visibility to that particular part, that is nothing but your detection risk. Detection risk is that the risk that the auditor will not detect a misstatement that exists in an assertion or in a financial statement level, aggregate which together is a material. So if you total all such areas, all such holes in the umbrella where I have not paid attention, or I missed out looking at, or I did not test appropriately below the umbrella, and that becomes my part of detection risk. That something was missed by the auditor. And that basically happens because I selected an inappropriate audit procedure. I misapplied an appropriate audit procedure. I misinterpreted the result from an audit procedure. There would be multiple reasons for that. I'll give you a simple example. Selecting an inappropriate audit procedure. For inventory, I was supposed to perform the physical verification. However, I just verified the records, the inventory list and everything. I checked the aging, I checked for the slow moving and non-moving items. That's it. I never performed the physical verification. So I never satisfied the assertions or the risk at the assertion level appropriately. That is selecting an inappropriate audit procedure or misapplying an appropriate audit procedure. For example, in the case of inventory also, there are 3 warehouses. One warehouse where 90% of the inventory is lying, and second 2 warehouses where 5% of the inventory is lying. I performed the physical count of the 5%, but I left out of the 90%. So there could be XYZ reason where I am not able to detect the risk, and that is known as a detection risk. Clear? Any doubt till now? If you combine all the 3 risks, which is your inherent risk, which is the rain, inherent risk, your control risk, and your detection risk. If you combine all the 3 elements, you will get your audit risk. Basically, audit risk is nothing but it's an combination of all the three particular parts. That one, the rain is going to fall, that is an inherent risk. Second risk, the water will drip from the umbrella because of the significant deficiencies or the deficiencies in the umbrella, that is a control risk. Detection risk is that auditor will miss looking onto those holes or some of the water which is falling, and the outcome is audit risk, that something is left out. At the end, what auditor is required to do? Auditor is required to certify that man is getting wet or not. So he might be not able to properly certify that, or his opinion is not appropriate. That is the audit risk, that the opinion which I am giving is inappropriate. Risk of expressing an inappropriate audit opinion is an audit risk. That after all these risks, after whatever is left, I go and I verify the umbrella, I think, and then I come back and I say, okay, that I give an opinion that man is not getting wet through the rain. That is, and if I miss some chance, if I miss some holes from where the water is coming, in that case, I would say I have given an inappropriate opinion because of the audit risk. So that is an audit risk, the combination of all the three: inherent, control, and the detection. Any doubts till now? Any doubts? Prashant, any doubt? Okay. If no doubts, then okay. Explain control risk. Control risk, when I talk about the control risk, is nothing but the risk that the control might not be able to prevent or detect or correct a misstatement. In this particular example, the umbrella is designed to protect the person below the umbrella from the rain. Okay, that is the role of umbrella. Now the control, I can say umbrella as a control basically. Okay. Now the purpose of umbrella is to prevent the rain or getting the person wet. Okay. Now if I say there is a risk that umbrella might not be able to prevent the rain from reaching to that particular person, there is a risk, okay, that umbrella might not be sufficient. For example, in some case the umbrella is smaller. Umbrella is very smaller. In some case you may find that umbrella is bigger, but that has very significant holes in the umbrella. So there are the probability of having the holes in umbrella, the probability of having a wrong size umbrella is an control risk. Means the probability that the control might not able to prevent, detect, or correct a misstatement on a timely basis. Are you getting the point? So that is your control risk. Clear? Any doubt? Okay. If no doubts, see, now we have understood the basic of your risk-based auditing. We understood some elements of the risk, like inherent risk, control risk, detection risk. And if you look at the two parts of this particular image, which is your inherent risk and control risk, means inherent risk is a rain and control risk is the chance that the umbrella is not able to stop the rain. If you combine these together, it becomes the risk of material misstatement. Means risk, that is the water will flow from the umbrella, that is the risk of material misstatement. Remember, in that way, by having that particular correlation that at the end, whatever risk is left, means whatever chances of water flowing from that umbrella, which the areas will be tested by the auditor, is nothing but the risk of material misstatement. Risk of material misstatement. It is nothing but a product of your inherent risk and your control risk, because whatever water is coming after the umbrella is nothing but the risk of material misstatement. So you might have seen this particular formula, that risk of material misstatement is equal to inherent risk into control risk. Okay, this particular formula is depicted by this particular image, that the inherent risk is the rain, control risk is something, the deficiencies or the chances of having that holes in the umbrella, and whatever water is flowing out of that umbrella is your risk of material misstatement, the chances that that water might come out of the umbrella and the person will get that. Okay, and when you multiply that risk of material misstatement with the audit risk, that the with the detection risk, that the auditor might not be able to identify all the risk of material misstatement on a timely basis, you get the audit risk, that the opinion is incorrect. Clear? Any doubt? Any doubt? Okay. Now, quickly, can someone tell me about the assertions? Remember, in the previous sessions, we have discussed about the assertions. Or I say that, whenever I discuss this particular part, that we need to identify risk of material misstatement at the assertion level. Can someone quickly, remind or tell me the assertions which were there? Let's say first, let's go to the transaction level. Quickly, the names of assertions which are there.
Completeness, accuracy, cutoff, existence and occurrence, presentation and disclosure, something.
Okay. Okay, good. But there are 5 assertions at the transaction level. 5. So completeness, accuracy, and cutoff. You gave the 3 1. Completeness, accuracy, cutoff. Occurrence also, yeah. You gave the occurrence.
Classification.
Yes. Classification is the last one. That is the transaction level. Now, can someone tell me at the account balance level?
Existence. Risk, right and obligation.
Come on. You are going right.
Existence, risk, right and obligation.
So existence, right and obligation, completion, and then valuation was there.
Okay, great. Yes. So basically, the assertions for the account balance level, as you said, that existence is there. Instead of occurrence, it will now become the existence, because I'm talking about account balance level. Okay, so existence occurrence will become existence. Then your completeness will remain the completeness. Your accuracy will become into valuation. Okay, then your you can say you have a rights and obligations on the part of that entity holds a right or obligation to have that particular uh, account balance or that particular liability or asset. Okay, so these are the four ones for the account balance level, and one is at presentation and disclosure level. Those are again occurrence and rights and obligation based on the type of the disclosure, that whether it's a transaction level disclosure or the basically your account level disclosure. Then you have a completeness, then you have a classification,
And accuracy.
and you have a accuracy or valuation. Okay, so these are the four assertions at the presentation and disclosure level. And why I'm repeating this particular these assertions, the reason, because we need to understand the risk at the assertion level. Remember, in our previous session also, I have shown you a risk control metrics file wherein we understand the risk at the assertion level. That okay, what is the risk in case of a revenue at the assertion level? On the basis of that, we then go ahead and draft whole of the risk control matrix, and then we do a planning, prepare the audit program. Okay, so that's why it's very important to remind or to understand the assertions, and then to start the discussion for our risk assessment part that we are now going to discuss. So basically now we will do a deep dive under of SA 315, deep dive of SA 315, that is your standard which talks about identifying and assessing the risk of material misstatement through understanding the entity and its environment. Because this standard basically is a very important one. Reason, because when I talk about risk-based audit, and if you have identified incorrect risk, your whole of the audit will go on toss. So the important and crucial step is to identify and assess the risk of material misstatement in the audit. Then only I will be able to perform the risk-based audit appropriately. So identifying and assessing the risk of material misstatement through understanding the entity, its environment, okay, and its environment. Very important as okay. Now, in risk-based audit, the first step that we perform is we identify the risk within the organization with respect to the financial statement at the assertion level and at the financial statement level. Okay. In risk-based audit, I understand, I identify that okay, where the risk is more, where there is a high chance of the risk. So first and foremost step of the risk-based audit is assessing the risk of material misstatement in financial statement. Now, can someone tell me how do you assess the risk? Like, okay, for example, just in a summary, okay, how do you perform the risk assessment? How do you perform the risk assessment? How you assess the risk of material misstatement? Anyone?
By
Very good.
understanding
Yes,
the
Hemant. Yes, please.
by understanding business environment, regulatory environment in which the entity is ongoing its business, and organizational structure also, any business environmental changes or any outside changes which can affect materially the organization.
Yes, yes, very good. Anyone else would like to add something? That how do you perform a risk assessment? Yes, Hemant, very good. Today, let's say, for example, one of your friend has reached out to you that please perform the audit of my particular private limited company or my limited company. You have done all the client acceptance and continuous part, engagement letter has been signed, everything till now you have performed perfectly fine. Dot to dot as it is mentioned in the standard. Now the question comes to perform the risk assessment of the entity. How will you perform that? And we have discussed this particular part in detail, don't worry. That is not something, it is not like that we have not discussed, this is discussed. Okay, so I'll tell you, as you correctly said, that when we are required to perform risk assessment uh, in respect of a financial statement, okay, and when we are required to assess the risk in financial statement, how we will do is there are some steps to perform the risk assessment. Okay, there are some steps that we need to follow to perform the risk assessment basically. Now that includes first of all obtaining the information, because the first step is you need to obtain the information about the entity, then only you will be able to understand the entity and its environment. Okay, I'll write the steps of risk assessment, steps involved in risk assessment. First one is to obtain the information and understanding that you already do at the time of when you perform CNA procedures, when you start the audit, when you prepare the audit plan, overall audit strategy. So this is something already you do, already being performed for preparation of audit strategy and audit plan. Okay, so you already do that at the start of the audit. Now, once you gather that particular information, okay, then you understand and you what you do is you identify the areas which are high risk areas through by performing some procedures or through some procedures, and that we need to understand. So the second step is performing risk assessment procedures. I call it RAP. That is the risk assessment procedures. You perform risk assessment procedures, and on the basis of that, you understand the risk which is lying, or you assess the risk of material misstatement in the financial statement or at the assertion level. Now, the standard guides us how to perform this risk assessment procedure. How to perform this risk assessment procedure is, first you do inquiries, then you perform analytical procedures, then you may perform observations, and then you may perform inspection. Okay. So you may perform inquiries, analytical procedures, observations, and inspection. Or you can call it IAOI. Okay. Now, can someone tell me what do you achieve by performing inquiries, or what do you ask in inquiries? Like, okay, I'm doing inquiry, but about what? What I will ask in inquiries?
Is there any internal control policy and system in the entity which has been employed by the entity's management, whether it is operating efficiently and how it is able to understand the risk elements in their entity, whether they are able to detect it properly or not?
Okay. Anyone else? See, if you ask this kind of question, let's say, for example, if I ask management that, okay, management, tell me, is there any internal control policy or risk assessment policy? And have you identified any deficiencies in the internal control? They will straightforward say, yes, we have the policy and we have not identified any deficiency. Matter over. They will close the chapter and they will not discuss further. So, in that case, we have to be double sure what we are asking. We have to be, pretty much sure that we are asking the correct question from the correct people. Okay, like let's say for example, standard way is to, okay, we will ask, we will perform or ask questions which will help us in identifying the risk. But if someone has to give an example, okay, these are the questions that someone may ask. Yes, Hemant, very good. So can someone give me certain kind of examples of questions that you may ask within the organization to understand the risk? Anyone? No? See, I'll tell you, I'll give you an example. Okay. So when I'm doing a risk assessment procedures and when I'm doing inquiries with the management, okay, I will go and manage. I will directly not ask the management, okay, management, tell me whether you have a significant deficiencies or not. But what I will do, for example, I will go and ask management, management, have you performed risk assessment procedures? If they will say yes, can you give me what was the outcome of that? Number one, I will understand how management has performed the risk assessment procedures. Number two, I will ask management, have you seen any changes that might have, significantly impacted your business? Changes might be external scenarios, internal scenarios, any such events which have impacted, for example, your financial reporting, your operating, or your areas which is, crucial to your business. For example, change in law, regulation, change in, management structure, or change in, sometimes happens that, okay, the company is being running, the promoters were earlier different, Now promoters sold all their shares to some new promoters. So there's a change in the promoters of the company, or the shareholders or owners of the company. Management is the same, CEO, CFOs, and everything is the same. But the person who invested in the company was holding majority of the majority of the shares, sold his shares, and now someone else is the owner of the company. So if there are some factors, some events, then what are that events? Have you identified certain events? Then with respect to the fraud, have you identified any fraud during the year? With respect to the IT, what IT systems do you use? Is there any migration in the IT systems? Then I will ask financial reporting. Who is involved in the financial reporting? Who prepares the financial statement? Do you prepare monthly financial statement? Do you prepare quarterly? Do you prepare annually? Who passes the manual journal entries? Have you identified any issues in the controls that are there for the preparation of the financial statements? Okay. I would ask, okay, can you give me a list of the controls process wise that you have implemented? Can you give me the areas where the internal auditor has identified deficiencies or issues? Is there any area where do you think that the controls are not working effectively? Any litigation happening in the company? Any notice of the inspection by any regulatory authority? So these are certain kind of questions, and as correctly mentioned by Hemant also, that we will prepare a list of questions, a questionnaire that we will share with the management, and we will ask them, management, tell me what you will do, how you will, what is the answer of these questions. Once we have that, okay, on the basis of that, we may perform some additional procedures. Then we may perform some additional procedures. For example, I may ask in-house legal team, I may ask marketing team, I may ask procurement team. Tell me, procurement team, that okay, is there any change in the raw material price? For example, the company is a manufacturing company. For them, steel is the biggest component of raw material. Okay, what do you see with issues with the steel procurement? What do you see, issues with the price of the steel? How you are coping up with the procurement policies, or is there any change in the procurement process compared to last year? If yes, there's a change, why that change was brought into the procurement process? Who is looking after the procurement? Do you perform procurement for all of the segment or division together, or the each of the segment or factory performs their procurement separately? Is there a centralized procurement team? A lot of questions are there that you can ask to understand the entity and to identify some of the risk by understanding the entity. Simple example with respect to procurement only. Let's say a company is having 3 different factories for manufacturing of, let's say, steel rods or something of steel XYZ. Okay. Now, their biggest raw material is steel. Now, when I ask question from the procurement team, do you perform sourcing of steel for all the 3 factories together, or the individual factory source their raw material as per their requirement? So the procurement team told me, no, the individual factory procure the steel as per their requirement. Means there is a risk that the procurement process at the each and every and factory level is different, and that's why the risk is that the company might not be procuring the steel at a standard price. Let's say, for example, as a company, I need 10,000 metric tons of steel. At the branch level or at the factory level, I may need 2,000, 4,000, 7,000, distributed. Now, when I place an order of 10,000 metric ton with a vendor, I get a discount because I'm placing a bulk order. That power of negotiation I may not have when I'm placing an order individually at a factory level. Number 2, there could be different vendor setups at the factory level. Means one factory is purchasing from X vendor, another factory is purchasing from Y vendor. So there could be difference in the quality of the raw material. There could be difference in the output of the finished good. There could be chance of the collusion at the factory level. Are you understanding? So by this way, just by making inquiries, by asking the questions, I can understand a lot of things in case of a company, in case of a process, and on the basis of that, I can identify areas where I need to perform rest of the procedures like analytical procedures, observations, inspection, to understand further the risk which is there in the process. Clear? Any doubt? So when I say I will perform inquiries of appropriate individual within the internal audit and analytical procedures and observations and inspection, I'm talking about this particular part, that I will ask them, okay, tell me the details, and on the basis of that, I will perform the procedures. Now, second question is that analytical procedures. We understood the inquiry perfectly fine. Very good. Analytical procedures. Where would you perform analytical procedures? Can someone give me an example of the analytical procedures that are performed at the risk assessment stage? Anyone? Okay, Hemant, good, very good. Analytical procedures that are performed at the risk assessment stage. What I will do in that? No one? Yes, Janine, good. Yes, Hemant, very good. But tell me one thing, if I'm performing the analytical procedures at the risk assessment stage, so won't it be too early to perform the analytical procedures? Now I'm just having the data. I do not know whether the data is correct or not. So do you think it is appropriate to perform analytical procedures at the risk assessment stage? Yes, guys. What do you think? Do you think it is advisable to perform analytical procedures at the risk assessment stage because I might not have the data, or I might not have the comfort over the data, whether the data is correct or not? Is it advisable to perform, or is it, or should we perform or not? I have written over here, but is it necessary that we should perform, or is it something that I have written incorrectly? Come on, guys.
So it will help me to understand whether the internal control system that has been applied by the management is appropriate and relevant for the organization as a whole.
Okay. Okay, good. Anyone else? Okay. Now, if I talk about risk assessment procedures, okay, we will understand this particular scenario with an example, a classic example, and on the basis of that, we will be able to understand in much more detail. So let's say, for example, I'll just open one question, just a minute. Just a minute. I think there is some issue. Wait a minute. Oh, sorry. Sorry for the trouble. I think there is some issue, technical issue. Just give me a minute. Okay. Now, there is a question or there is a particular scenario that we will understand. On the basis of that, we will understand the risk assessment procedures or analytical procedures that is performed at the risk assessment stage. Basically, the question is here that you are performing a risk assessment, you are an auditor performing a risk assessment for Yummy Treats, a chain of bakery cafes. Okay. Yummy Trees has experienced rapid growth in past year, opening several new locations. Okay, and several new locations. However, despite the expansion, the company's overall profitability has declined. During your analytical procedures, you performed a high-level analysis comparing the revenue growth. Total revenue has increased 20% compared to the previous year. Number of stores. The number of stores has increased by 40% compared to the previous year. Okay. Now, this initial analysis reveals an unexpected trend. Despite a significant increase in the number of stores, revenue growth has not kept the pace. This triggers your auditor's sense and suggests a potential risk of misstatement. Okay. Now, here, if you see this particular example, okay, here by performing the initial risk assessment, what we came to know is even though the total revenue has has increased, the number of stores has increased, the profitability is not there. The profitability is not there. Okay. And as a result, there could be risk of material misstatement involved in this. Now, there could be material, different type of risk. So we need to understand, by performing the which risk is there, which risk is not there. Okay. So based on that, we need to, do further procedures. But yes, this gives me an insight. There could be risk. Can someone tell me, some examples of the risk that may think, might be relevant over here? For example, let's go to this question. So this one is identify potential risk. Based on the initial analytical procedures, what are the some potential risk of misstatement, material misstatement that might exist at the Yummy Trees? You need to consider both financial and operational risk. Some example of risk that you think might be there. Revenue is increasing, stores are increasing, but profitability is declining. Yes, Hemant, very good.
There may be inflation factor that is causing the high jump in the prices of the selling of the goods, and that's why there is a increase in the revenue amount.
Okay. Anyone else? Very good. Yes. Anyone else? Yes, Ginny, very good. Yes, Hemant, very good. Anyone? So one could be fictitious sales. Okay, the sales is fictitious. Number two, it could be channel stuffing because this is a chain of bakery cafes. Okay, so channel stuffing could be also there. Number three, I am doing incorrect revenue recognition. I'm not recording the revenue appropriately or in appropriate time or something like that. Okay. Number four, unrecorded expenses, or the expenses which are being recorded now because of which the profitability has declined. I have not performed the cutoff, company has not performed the cutoff in the expenses appropriately. Okay. Again, there could be, ineffective store performance. If I talk about operational side, store is not performing effectively, means although they are generating the revenue, operational cost has increased of those stores, or the cost in opening the new stores because the store size has increased by 40%, or the cost of opening new stores is eating over all your profitability. So there could be number of risks that I can identify by just this initial analytical procedure. So that's why performing analytical procedure is advisable, because that gives you an understanding of some of the areas of risk assess, or some of the areas of material misstatement. Are you getting? So why it is necessary to perform risk assessment, analytical procedures at the time of risk assessment? Although I would say yes, there are chances that the data might not be correct. For example, in our case, there are chances that the increase of 20% of the revenue is incorrect, because I have not tested the revenue yet. But based on my understanding of the entity, how much deviation, how much error I am expecting. Okay, not 20%, but 18%, or not 20%, maybe 22%, plus minus 5%, plus minus 2%. I may expect a range of misstatement. Perfectly fine. But it will not happen that the plus 20% will get into minus 20%. That will be a significant change. So when I will be getting a data, I will be having a rough idea of plus minus 5%, 2%, a range, that okay, this will be the revenue. This is the revenue subject to the misstatements. That should be the range of the revenue. And number of stores is something that already is there, like based on the data that management will provide me. So there is less chance in the misstatement in the number of stores. So although the data might be aggregated at the high level, okay, this only provides me broad initial indication whether a misstatement may exist. But as I said, it is necessary to perform, because that will give you an indication. Then on the basis of that indication, I may perform observation and inspection. Clear? Any doubt till now? So for this particular part, inquiries, analytical procedure, observation and inspection, I have already obtained the information and understanding that was already prepared, already being performed for the preparation of audit plan and audit strategy, and that information will help me to perform this kind of activity, risk assessment procedures. Now, when I say that I need to understand the entity and its environment, okay, understand the entity, I need to understand the entity including its operation. Okay, so we need to, I'll just list down some areas that are relevant from the point of view of understanding the entity. The entity and its environment. So these are certain areas that are relevant from understanding the entity and its environment. One is your relevant industry and regulatory application. For example, industry law, regulatory law, which are applicable to the company. Relevant industry and regulatory you can say regulatory frameworks applicable to the company. Second, you need to understand the nature of entity by understanding the operations, like what they manufacture basically, ownership, governance, structure, okay, investment company that makes, for example, company has invested in special purpose entities or company has invested in subsidiaries or something like that. Group structure, if the company is a part of a group, then group structure is necessary to understand. Okay. Then oh, yeah. I'll go to the next page. Then you have, after understanding the operation, ownership, governance, investment, and the group structure, you need to understand few things about the transaction and the account balances for the company. So information about transaction and account balances, that is accounting policies that are adopted for these transactions or account balances. Okay, any estimations or estimates that are being made in those transactions or account balances. Then you have a related party transactions. So how many related party transactions are there? How many related party balances are there? Okay. Then overall objective and strategy of the company. So sometimes, company prepares 5 years plans, 2 years plan, every yearly budget, their long-term targets, goal, mission, vision, all that particular stuff will also give you an understanding where the company is going. Evaluation of companies' financial performance. So can someone give me an example of the last one, evaluation of the company's financial performance?
Various financial ratios are there,
Okay,
and it's a financial structure. How it is financed, we will check into.
good. Yes. Anyone else? Some example of what is I would do in evaluation of financial performance. Profitability ratios, leverage ratios. Yes, yeah, that's very good. I'll show you a live example to you guys for this one. Okay, how I evaluate the company's financial performance. By that way, you will be able to get a good understanding. Before I show that particular file, please do not focus on the name. It is publicly available data. So, I have taken the data from the public portals that is available to the all people. And that is for the educational and understanding purpose. Do not compare or do not think it is, some kind of advice. Do not, please. Okay. So, this is one of the company for which they have just issued Q2 FY25 quarterly, evaluation of the financial performance. So this is the B2C business. how much business growth is there, adjusted revenue is there, this is the growth in the revenue, this is EBITDA, this is been increase in the EBITDA levels. So they are measuring this performance over here in their quarterly presentations. They will also provide you some information that 58% year on year adjusted revenue growth compared to what is 40% outlook was there, means the growth is more compared to the outlook what was budgeted. Okay, started consolidating the recently acquired entertainment ticketing business from August this XYZ. Okay, so something is happening. Then a lot of numbers will be given in financial one, like food delivery, quick commerce, going out, a lot of financial performance evaluation the company itself prepares. If it is a listed company, the company itself prepares. If the company is not a listed company, private limited company, small company, you might not be able to get this particular information in this much detail. But if it's a listed, if it is something, a company which also provides information to the regulatory authorities, from there also you can get these kind of information. By this way, I can understand, okay, this is, for example, okay, the revenue is growing 21% year on year or 5% quarter on quarter. Quick commerce 122%, 25% quarter on quarter, 171% year on year, and 46% on quarter of quarter going out. GOV. B2B business 98% on year and 22% quarter on quarter. Okay, then revenue this much was increased. Profitability also increased. EBITDA increased 298 CR year on year to 330 CR quarter 2 FY25. Now let's assume hypothetical example. Let's assume this is not the profit. Instead, it was written like loss. So by analyzing this information, hypothetical example, let's say it was written loss has increased by this particular amount. So if the revenue was increasing, financial performance was there, company was doing good, then what happened? The company made a loss. That will trigger the question. And as an auditor, I may go in depth and perform some more procedures to understand that. Why the company was not able to meet the outlook. Okay, let's say, for example, company was expecting a profit, but the company made a loss. In that case, I would go and understand what was the scenario, why the company made a loss. So analysis or evaluation of the performance of the company. Same way, store addition. So how much store addition is happening? This is also something, analytical data the company has already prepared. I may use this analytical data to perform my initial analytics as a part of risk assessment procedures. Some questions are given, some more data is given, that what is the scenario. I may perform some more analytical procedures, some more understanding of the scenarios, understanding of the company, how the company is running. For example, let's say capital expenditure. So quarter on quarter, the company has higher capital expenditure. Means I expect that, the capital expenditure will increase. Accordingly, there will be a cash outflow. Okay, that is aligned with the company's policies or company's outlook. So this way, I would understand the evaluation of the company's financial performance, and this particular evaluation will help me to identify the material areas. For example, capital expenditure. At least for FY25, I can say that, capital expenditure is a very good area. Capital expenditure is a material area. Then company is, kind of, there was this one, that company started consolidation. So this could also be an area where there could be a, risk of material misstatement because complex transactions. This is the complex transaction area. Plus revenue is increasing. So there are, if I show you quickly, okay, so this is the consolidated revenue summary. Okay, so you have a different segment wise revenue. This is the revenue 2340 in food delivery, quick commerce, this. Okay, now from there I can clearly identify food delivery, B2B supplies, and quick commerce are the major portion of the company. So these are the areas where there is a major revenue. So I need to pay more attention to that. Are you understanding? For example, after having the revenue of 1516, there is a loss of 8 crores. Okay. So there's a loss in the quick commerce, even though having a good increase in the revenue. Good quarter to quarter change in the revenue, I was still lost in the EBITDA level, at the EBITDA level. Same way, B2B supplies. After having this much of revenue, which is increased in year on year and quarter on quarter, I have a loss. I will do more risk assessment procedures by understanding why there is a loss. This is a critical area for me. So this is how I will do evaluation of the company's financial performance. Okay. Any doubt with respect to this one? Any doubt? Any doubt, guys? So now you understand that, okay, I need to perform risk assessment procedures, which involves inquiries, analytical procedures, observation, and inspection, and that will be done by understanding the entity, by obtaining that information. Okay, this information, and on the basis of that, we will perform analytical procedures. I showed you one example. We will may perform inspection, may perform observation. Clear? If no further doubts, okay, what I propose is let's take a quick 10-minute break. After the break, we'll gather back and continue the session. Okay, let's take a quick 10-minute break. Ashok ji. Ashok ji. Ashok ji. Ashok ji, break start किया. Now, what we are going to discuss is a very important part. We understood the entity, we understood the environment. Now, as a part of understanding the entity's environment, we are required to understand entity's internal controls. Entity's internal controls. And very important things we will discuss with this particular part. Very, very important things. Okay, because here we are going to discuss some important aspects of the internal control and some important aspects of the components of internal control. Okay, now can someone provide me an example of an internal control? Like, okay, we saw in image, but apart from that, a real life example of an internal control, a control that you have seen. Anyone? An example of an internal control.
How a transaction is initiated, how it is being passed, and afterwards how it is actually in existence becomes a transaction. Like a purchase case, purchase order is initiated, then after some quotations are got. After that, quotations are verified, which quotation they have to accept, where to they will have that purchases will be made. Supplier analysis will be there basically. Afterwards, when the purchases are sanctioned, how the goods are inward into the entity or say factory or any organization's building, their quality assessment is there, whether they find the goods as per their quality requirement or not, and if they are not as per their requirement, what procedures are followed by them to initiate those returns with the suppliers, and how the adjustments will be made in the accounting balances, etc. And then finally, when it is passed the quality control checks, then how the quantities are entered into the registers and how the inventory stock taking has been done.
Yes,
Means right from the transactions initiating till the actual accounting point, various stages are there. How the stages are performed by the various employees, how who is there any segregation of the duties and their controls and responsibility, we will check into.
very good, very good. Absolutely correct. From start to end, multiple places where the internal controls are there. Okay, multiple points wherein internal controls have been placed. Okay, and by this way we can understand, how internal controls work. For example, authorization. For example, approvals. Okay, verification that appropriately things are recorded. Those are some examples of internal controls. Now, internal controls can be at multiple level in the organization. Can someone tell me the levels at the which internal controls can operate in an organization level? When I say organization level means at the hierarchy level in the organization. Can someone give me the classes of the or the types of the internal control?
Managerial controls and operational controls.
Okay. Anyone else? Types of internal controls at the organization level. No? So when I talk about types of internal control at the organizational level, basically they are entity level controls, or at operation or function level controls, division level controls. So when I talk about, as you correctly said, managerial controls, they are known as an entity level controls. They are ELC, entity level controls. They are on the top, and then comes the division level, operating unit, and function level controls. When I talk about type of controls, okay, so there could be controls with respect to the operation activity, controls with respect to the reporting activity, controls with respect to the compliance activity. So there can be controls targeting to different kind of activities also. Or when I say type of the control, control can be preventive control, control can be detective control. So there could be multiple combinations when it comes to the internal control. And that is an aspect of the internal control cube that we will discuss in some time. But can anyone tell me the components of internal control? Which are the components of internal control? No, Jimmy. I'm talking about components of internal control. Come on, guys. Sorry. Anyone? Components of internal control, very important. Okay, I'll give you a hint. There are 5 components of internal control. There are 5 components of internal control. Anyone? No? Okay.
It can be a control environment that has been set up by the entity's management. It's a risk assessment processes, various control activities that have been devised by them, and information system and communication, how they communicate their controls, and then lastly, the monitoring of those controls.
Very good. Very good. Yes. So these are the components of internal controls. The 5 components of internal control, basically they are the based on the COSO framework also. Okay. Now, when you combine these 5 components of internal control, okay, plus the level of the control, plus the type at which or the activity at which they are impacting, this becomes a control cube, whole control cube. So 5 components. So these are nothing but the components of internal control. These are nothing but the type of activity they are covering. And this is nothing but the level at which the controls are operating, are placed. Okay. So if I combine all these things, I'll get an internal control cube. Or the 3-dimensional aspect of the internal control, that is sometimes it is called. Now we need to understand these components. In order to effectively assess the internal controls, we need to understand the components and we need to assess the component. So in order to assess the internal control, you need to assess the internal control at component level. So at each and every component level, I will understand whether the control is good or not. So let's talk about the first, control environment. Can someone give me an example? What do you mean by control environment? What is control environment in case of internal control? Examples of element that could be, impacting the control environment or that decide the control environment. Come on, guys. Okay. Anyone? The elements which are part of the first component, that is a control environment. No? Okay.
HR policies and practices, how they appoint their internal staff or employees or divisional areas managers. Their organizational structure would also be important one, and their management style and attitude of operating, how they are going to achieve their operate objectives. Then
Yes.
the
Yes. Good.
participation by those charged with governance in the overall process of this and control environment, and the communication of the ethical values or such policies that they have set at the management level to their employees.
Yes. Absolutely correct. So when I talk about the components, or when I talk about the first component, which is control environment. Okay. Simple example, the tone which is coming from the top, how the culture, values, ethical standard, okay, how the management is looking at the controls, how the management, those charged with governance at the company level, emphasizing the integrity, ethical behavior, accountability, and how they are, perceiving the controls, how they are giving the importance to the control. That may involve code of conduct, provide ethical trainings, establishing whistleblower policy, HR policies. What is the tone at the top? How they are looking at the controls that defines your control environment. Okay, so that is the first element, control environment. The second element is risk assessment. Now, can someone tell me what is this risk assessment? Now, we were talking about earlier risk assessment. Is this the same risk assessment or different risk assessment?
This one is different. This risk assessment is on the part of management that they are doing. Like policies and procedures or systems they devise in the entity to identify risk in their organization, which can be relevant for the preparation of the financial reporting purpose.
Absolutely correct. Yes. So when I talk about risk assessment, that is the entity's risk assessment I'm talking about. Means I'm talking about that how entities are identifying the risk within the financial statement at the assertion level and the financial statement level. Now, the reason why entity is required to perform a risk assessment is because it is the responsibility of the management to establish internal controls. It is the responsibility of the management to prepare financial statements that are free from material misstatements. So, in order to achieve that responsibility, management is required to perform risk assessment. Management is required to design and implement controls. And as I said, management is required to perform risk assessment. This is the part where management performs entities risk assessment process. Changes in operating environment, personnel, IT systems, changes in IT systems, growth, technological change, different products, models, corporate restructuring, foreign operations, accounting changes, everything. Management perform analysis of these particular items of each and every change when they perform the risk assessment procedures. So basically, this is entities risk assessment procedure. Now, the third part is the control activities. Can someone give me what control activities include? What are control activities? Anyone? What are these control activities I'm talking about? In order to understand internal control, what I need to understand with respect to control activities?
The control activities are actually the processes or procedure that has been used by management to achieve their control objective. It can be segregation of duties where they can check whether the particular transaction has been handled by various persons.
Yes, good. Yes, absolutely correct. So when I talk about control activities, I'm talking about the activity that management is performing. Okay. So the activity which is actually there. For examples, I'll give you an example. So we were seeing this particular financial evaluation. Okay. Now this, before getting published in the market, management might have performed the review of this. So you can say this information is after review. This review is known as a performance review. Example of a performance review, where someone performs a review of the some work that has been done by another person. Okay, so performance reviews is a type of a control activity. Then you have a physical controls, physical security, authorization to access computer systems and programs, authorization to access hardwares. Okay, we have seen a lot of physical security examples in before. So that physical security, segregation of duty. One person should not be allowed to perform critical tasks. For example, the person who is processing the invoice should not be issuing payments. The person who is recording the sales should not also be recording the cash receipt or bank entries or something like that. So a duty should be segregated. Preparer and approver should be different. Segregation of duties is a type of a control activity. So they establish control, management has to establish these activities in order to achieve the objective of the control. Okay, so that is a control activity, which is a fourth, which is the third component. Fourth component is an information system. Again, if anyone can explain what is information and communication? Why we have an information and communication as a control component? Why? What is information and communication doing over here? Anyone? Okay, Hemant. Yes, somewhat related. I'll explain you information and communication. See, to perform any control, to perform any activity, you need to have information. You need to have that communication channels open. For example, I'm talking about segregation of duty, that the preparer and the reviewer is different. Now, when preparer will prepare, it will provide data to the reviewer and the reviewer will review. If reviewer has some comments, he will reach out back to the preparer. So that providing of information to the reviewer and reviewer reaching out back to the preparer, that is the information and communication channel. So that information communication between people, between systems, between activities is something which is necessary, and that is a part of the component. Okay. That's why it is very essential to have information and communication. Otherwise, without information communication channels, without information communication ways, controls cannot work. Any activity cannot work. If I'll not provide you information what I have done, how will you verify? Simple. So internal external channels for the communication, for information is something that is necessary for the controls to work and operate effectively. And the last part is the monitoring activity. Monitoring activity is ongoing monitoring and evaluation of the all the control system, internal control system, to ensure that everything is working effectively. So it's a continuous evaluation of the internal control system. That's why it is sitting at the bottom. It is evaluating whatever is there on the upper side in all the directions. If I give you an example with a bakery, okay, if I give you an example with a bakery, let's say let's discuss the bakery example and the internal control in the bakery, because that will give you a good clarity, trust me. When I talk about bakery, so the first control component for me is my control environment. That includes simple, clean, and organized kitchen. Okay, clean and organized kitchen rules set by owner. So if owner says that no, kitchen should be clean, there should be organized, all the things should be at their place. Okay, this is the setting tone at the top. How owner wants the bakery's kitchen to look like or to operate like. Then comes the risk assessment. Over there, risk assessment is owner identifying potential problems like you can say overheating of bakery, fire in the bakery, okay, spoilage or spoiling of items or raw material basically, okay, some pest issue could be there. Okay, so he's identifying problems, he's doing risk assessment, what could go wrong. Okay, broken equipments, a lot of things he's identifying what could go wrong in a bakery. Then comes the control activity, wherein the owner is making people responsible to check temperatures for overheating. Okay, so he's asking, okay, check the temperature, there should not be overheating. Check the fire equipments for fire. Okay, check spoilage. For example, check, if ingredients are getting spoiled or something like that. So check spoiling, check for pest, or perform the pest control, something like that. So he's asking his personnel to perform these particular checks. These are the control activities, and someone will review. Then you have a communication and information. That is basically the method or way bakers should provide periodic update about your control activities and outcome. So let's say, for example, someone checked the temperature and there is a overheating. So how to communicate? Like, okay, for example, simple example, in a mall, You go, someone checks your the body at the start, scanning happens when you enter the mall. Now that is in control activity, perfectly fine. But the communication and information channel is, if someone identifies, the security guard at the start of the mall identifies, no, that person is carrying some contraband item, that person is carrying some critical item which should not be allowed inside the mall. What then should be done? I have the control activity. Person is checking, person is scanning. What is the second step when he identifies something? Let's say, for example, that security guard identifies a bomb. What is the second step? To whom he should reach out, to whom he should communicate if something goes wrong. If the control activity gives you a red flag, it gives you something, issues. So that is the method or way, they should communicate with each other. And then the last part is the monitoring activities. Basically here, the overall monitoring, okay, of the bakery. Including your how the final goods are coming out, how the monitoring, how the bakery is getting, how the bakery is running, whether everything is good, not good, something is issue, how customers are complaining, overall monitoring of the bakery, overall monitoring of these aspects. This is how the control environment works. So if you understand all these 5 components, you will understand the control. You will understand the internal control. There any doubt with the internal control components and how to understand the internal controls? Any doubt? Yes, no, yes.
Sir, in control activities, we saw that there is information processing in which two types of control are logically there. There are application controls and IT related controls. And under IT related controls there are sub-classification like access control or updation control to the software or etc. Then in module, one more point is there which is apart from this IT controls, which says the physical control actually, and under that it is giving example of authorization for access to the computer data, program and files. तो ये physical control कैसे होगा sir? It should be the IT related control ना?
No, I'll tell you. So sometimes what happens, let's say for example, authorization for access to computer programs and data file. Basically, let's say you understand a server scenario. Server is there. Okay. Now, if a person is somewhere sitting separately, if an employee is there, for him to access the server, it will be IT control. But the IT guy who is sitting in that particular area, who has to access the server physically and access the computer program physically of that server, so that he can do the maintenance of the server, or he wants to access the data files of the server for the maintenance of the server, not for the data files that are used in the operation. In that case, it will be a physical control that I need first to enter into that particular server room. I need to access, physical securities are there. So sometimes there are these security tokens without which you cannot access the server system or the server operating system. So that security token to access the server computer program or the data files of the server will form part of physical control.
So if the question comes in MCQ, like access to communication data and files, would it form under IT control or a physical control? Then our answer should be physical control, first priority, na?
Access to, sorry, what? Can you
Access
repeat
to computer program and data files.
Yes.
Which type of control it is? IT control or a physical control?
So don't worry, in exam, they will actually provide you whether it's a program change, program data, what kind of access is there. Okay. So when in exam, it will not be a one-liner, but they will explain you. And based on that, based on this understanding, whether it is in physical access to the computer programs or files, or whether it's an IT related access, on the basis of that, you need to select.
Okay, sir.
Any other doubt, guys? Any other doubt? No? Okay. If no doubts, let's proceed further. We understood about the control components, internal control components. Okay. Now, again, we understood about particular elements of the internal control, control environment, risk assessment process, entities risk assessment process. I would like to talk about entities risk assessment process. So when entity performs a risk assessment process, they are required to identify business risk, estimate the significance of the risk, assess the likelihood, and decide about that risk. So the way we have discussed our risk assessment, same way entity is required to perform their own risk assessment in detail. Okay, so all the details that we have seen in our risk assessment should be there in the entity's risk assessment also. And as an auditor, I need to obtain the understanding of that particular process. Now, can someone tell me, let's say for example, company, if you let's say you went to the company and asked the company, okay, company, tell me what is the risk assessment procedure you have, and the company tells you, okay, I don't have any risk assessment procedure, we do not perform such procedures, then what you will do? Company tells you, okay, we do not perform any such risk assessment procedure. What you will do? Like you went and ahead and asked a company, okay, company, tell me what risk assessment procedures are you following? Company says, I'm not following any risk assessment procedure, I do not do anything. Simple, straightforward.
If risk assessment component is missing, then overall internal control that has been there in the entity is deficient. So there are maybe chances of a fraud and error that can be materially affecting the financial statements. So I would have to more perform some substantive analytical procedures, and accordingly I will decide the risk level of the areas and I will perform the audit procedures.
Okay, absolutely correct. So when I say if the risk assessment procedures or risk assessment activity of the entity is missing, entity does not perform a risk assessment activity, in that case, what happens? In that case, I could count that one of the component of internal control is missing. If one of the component of internal control is missing, that means there is a significant deficiency in the internal control. Okay, there's a significant deficiency in the internal control, and based on that, I will decide the reliance upon the internal control. If I identify any significant deficiency in the internal control, that will directly impact my reliance on the internal controls. Not only risk assessment, but let's say for example, you have issues with the control environment, you have issues with the control activity, you have information communication issues. So if you identify any issue in the control in internal control components, issues in the internal control components, that would result directly into internal control deficiency. Simple. There's a deficiency in the internal control. Now, let's say, okay, I identified the deficiency in the internal control, perfectly fine. There's a deficiency in the internal control. Now, there is one more term that we need to understand with respect to the deficiency in the internal control. Okay. And that is material weakness. Deficiencies in the internal control and material weakness. Can anyone tell me the difference between both? Anyone? What is the difference between material weakness and deficiencies, internal control deficiency?
I am not sure for the view, but I would like to say that if internal control system has been there in the entity, which is planned and applied properly, but at the time of execution, it is deficient. It is not followed properly, or say the process for the application and its monitoring and review process was weaker side. That's why there was a deficiency. And when I say about that, the weakness of the internal control system means the overall internal control system is not adequate, relevant to the size of the organization or the nature of the business that should have been there.
Okay. Okay, good. Anyone else would like to add something? So I am discussing here three different terms. One is deficiency in the internal control. Okay. Second term I'm talking about significant deficiency in the internal control. And third, I'm talking about material weakness. And very important terms to understand, because on the basis of that, we will be able to understand how it is working. So deficiency, then significant deficiency, and then material weakness. There are three terms that we want to discuss. Anyone would like to add or differentiate what they are for?
When we say it is material, it is probably the thing that we are pointing towards, that it increasing the risk of possibility of the fraud in financial statements. That's when we say that it is a material weakness.
Yes, absolutely. So when I talk about deficiency in the internal financial control, over financial reporting, or in internal control, basically, it is the design or the operation of the control that doesn't allow management or employees to perform their functions or to prevent or detect misstatements. So deficiency in the internal control is something like control does not prevent slash detect the misstatement on timely basis. Okay, so that is my deficiency in the internal control. Now, when I talk about significant deficiency, okay, when I talk about significant deficiency, that is my multiple deficiencies. And when I talk about significant deficiency, that is the multiple deficiencies that we have discussed just now. Okay, multiple issues that are not preventing or detecting misstatement on a timely basis are of such nature, by multiplying or by adding up, are of such nature that requires attention of the those charged with governance, requires attention of those charged with governance, and there's a reasonable possibility, along with reasonable possibility that the misstatement, okay, is not prevented or detected on a timely basis. So again, misstatement is there, which is not prevented or detected on timely basis. Now that could be in a design, and that could be in the operations. So it could be design related or it could be operation related. And we will understand what is design related deficiencies and what are operation related deficiencies in some time. Don't worry on that. Now, then comes the next part, material weakness. When I will call a material weakness comes into the picture when deficiencies, including significant deficiencies. So, deficiencies plus significant deficiencies. Okay. So, deficiencies plus significant deficiencies in combination are of such a nature that there is reasonable possibility that there is material misstatement which is not detected or prevented on a timely basis. In other words, when I say the deficiencies are of such a nature that the misstatement that is either not prevented or detected on a possibility basis, on a probability basis, is material. When the concept of materiality comes into the picture with deficiency, that becomes your material weakness. Means when the holes in the umbrella are of such nature, or the possibility of having holes in the umbrella is of such size that I would say a lot of water will come into upon that person who is holding the umbrella. That is a material weakness. Okay, so I have a higher possibility of a misstatement which is of material nature when I talk about material weakness. Multiple control deficiencies affecting multiple financial statement account balances or disclosures at the same time with a significant risk, material weakness. So you might be clear now with the term deficiency in the internal control, significant deficiency, and material weakness. We will again go back on this particular discussion when we will be discussing SA 450. We will revisit this particular topic because at that particular point in time, we will understand the evaluation of the misstatement. And again, we will identify the category of the misstatement. But as of now, understand these three categories of the misstatement. Because based on my overall evaluation of the, of the control environment, I may identify a deficiency. But whether that deficiency is a significant deficiency or whether that deficiency is a material weakness, you may need to perform some additional procedures and then you will be able to decide. Clear? Any doubt till now? Any doubt? Now, if let's say, for example, we are performing risk assessment procedures, we are doing control components, understanding the controls and everything, that stuff is there. But why we are required to do, or why we are required to understand internal controls? Why we can't directly go for a substantive testing? Forget the internal controls. Why I cannot directly perform substantive testing based on risk assessment procedures? Why I am required to check for the internal controls? What is the need for this?
will help me to identify the risky areas only, so that I would deploy all my time and resources at that particular area only to achieve reasonable audit conclusive.
Okay. Anyone else? Why I am required to understand internal controls? What is the need? Saving of time, yes. We have to finish audit on a timely basis. Yes, very good. Apart from that, apart from saving of time and audit finish on audit on timely basis, what is the need of understanding the internal controls? Anyone, guys? Apart from having we have to finish the audit, apart from saving of time, why internal controls? There's a limit to substantive testing. Okay. Anything else?
The management is the one who is actually preparing the financial statements. Management is also responsible, and he is saying that the orderly and efficient conduct of the business was throughout the financial year, and he was able to prevent and detect the material frauds and errors. So that they are saying that the financial statements that we have prepared are free from risk or error fraud. So whether the internal control system is by assessing that internal control system, we can give reasonable assurance whether they provide a true and fair view, management assumptions were relevant or not. Objectivity will also be there to understand.
Okay. Okay. I will explain with an example why at some places it is necessary for us to look into the controls. Okay. Why it is not feasible for us to go to and perform substantive testing. Just a minute, let me.
Excuse me, sir.
Yes.
We also require internal control to see if we directly do the substantive audit, then we will check all the books of accounts and other ones. But in preparation of that, the other departments also were there. Different departments and different peoples were holding that responsibility, and they will, if they will done any fraud or any embezzlement or anything else, so that we can come to know about that also with the use of internal control analysis.
Yes. Yes. Yes, absolutely correct. So, as you correctly pointed out in earlier, Pooja, as you gave the answer, now see, a lot of things are there to go for the internal controls. We are going for the risk-based auditing, and not every time it is feasible for us because of the timely audit, because of the there's a limit to the substantive testing. There is a detection risk involved. Okay. So to reduce the audit risk, we have to rely upon the internal controls. That is fine. Okay. Now, I will show you one example where it is actually not possible for the auditor to perform the substantive testing because of the nature of the business. We'll see one example. You are an audit senior assigned to the audit of robo manufacturing, a leading manufacturer of specialized electronic components Robo manufacturing prides itself on its state-of-the-art fully automated production process. Their flagship facility features a network of robotic assembly lines, minimizing human intervention in the manufacturing process. So, robo manufacturing automated system controls and the monitoring and monitors the entire production cycle, including raw material management, automated guided vehicles, transport raw material from warehouse to the assembly lines based on real-time production needs. Sensor tracks the quantity of the raw material required. Okay. Second, production. Sorry. Robotic arms assemble the electronic component with precision, guided by the pre-programmed instruction and computer vision systems. Sensor monitors production output, cycle times, and the quality metrics. Third, finished goods. Complete components are automatically inspected, packaged, and transferred to the finished goods warehouse. Systems update the inventory on a real-time basis. Okay. Now, the manual intervention of human is limited to system oversight. A small team of technicians monitors the system's quality control, random sample check of finished goods, and inventory count. Periodic physical inventory count. Okay. Now, here, in this case, reliance on the automated system. Robo manufacturing heavily relies on the automated system for accurately recording of inventory transactions, including cost of goods sold. Limited manual controls, system complexity. Now, in this particular example, if you see how much it is correlated, how much it is connected automatically. Okay. Now, if I have to do substantive testing, it will be very difficult for me to perform a substantive testing, and it will give me no comfort. Reason, because everything is automated, everything is interconnected. So instead of performing substantive testing here, because of the limited human intervention, I may choose to perform control analysis. I may choose to perform internal control analysis, because that will give me understanding of the whole automated system. That will give me the logic of the system. Because let's say in some cases, if it is a pre-programmed, it is, how AI driven, in that case, understanding the logic, understanding the controls will give you more comfort, more evidence than the substantive testing. For example, if you are testing AI system, how will you perform substantive testing? If someone or some work is given to the AI, substantive testing will not give you that much benefit or that much comfort. In substantive testing, I may, do a input output check. Okay, this is the data I'm doing as input. This is the output I have received. But controls testing will give me a good understanding of what controls are placed, how the transactions are processed, and will give me a good audit evidence and the comfort, because at the end I need sufficient and appropriate audit evidence. So in some of the scenarios, it will not be feasible for you to only perform substantive testing. Understand that. Plus, there is a section 143(3)(I) of the Companies Act. Can someone explain me what that section is? That is the clause I, subsection 3 of section 143 of Companies Act. What is that? So, section 143(3)(I), what is that section? Anyone?
So I don't not exactly would say that it is proper or not, but it is a Companies Act requirement where auditors are like to report on the adequacy and effectiveness of the company's internal financial control systems.
Absolutely correct. Yes, you are right. So 143(3)(I) basically talks about that, okay, as an auditor, okay, whether the company has adequate internal financial control with reference to the financial statement, in place and their operating effectiveness of such controls. I am required to report on that particular matter as an auditor. So if I scope out the internal controls, how would I report on that particular part? Section 404 of SOX Act, Surveillance and Obscene Act of 2002, US based. So if it's a company US listed, they have to report under section 404. How will I do that without verifying the internal controls? So at each and every place, even if the company where this is required, okay. So on those areas, even the directors of the companies in some cases, okay, for example, Rule 8 of the company's account rules requires board of director to report, the details in respect of adequacy of the internal financial controls. So over there's a requirement on the board of directors also. So there are a lot many requirements where I'm required to report on the internal controls, and that is clear. That is part of the law. Plus, it is required to obtain sufficient and appropriate audit evidence. So in certain scenario, in certain cases, substantive procedures will not provide sufficient and appropriate audit evidence. Okay. So in certain scenarios, we need to understand that substantive audit procedures will not provide the substantive audit procedures will not provide sufficient and appropriate audit evidence. In that case, it becomes mandatory to perform control testing, control analysis. Clear? Any doubt till now? Any doubt? And if no doubt, so this is whole together is your SA 315, identifying and performing the risk assessment, risk of material misstatement. We identified and assessed the risk of material misstatement at the transaction level, at the financial statement level. Even we went ahead and understood the deficiencies of the risk with respect to the controls. That is, we are required to do as per SA 315. Any doubt till now? Any doubt? Okay, if no doubts, let's proceed and go through the module and study material to understand how the topic is given over there, and how what we have discussed, how it correlates to that, so that when you will do a revision of the topic from the study material, when you will read, you will have a good understanding. Essay. So this is the chapter 4. Okay, again chapter 4 provides some of the chapter overview is given: risk-based audit, internal controls, audit, then internal control systems, nature, objective, structure, components we discussed, COSO 1, review of system of internal control, manual evaluation of system, we will come to that, internal control, risk assessment, we saw that, framework on reporting, we saw some of the portion on reporting part under section 143. Okay, reporting on client's internal control weakness, but as of now we understood what is material weakness, significant deficiencies. So some portion is remaining that will be covered in the subsequent session, and some we have already discussed. First of all, materiality and risk assessment. So based on that, we need to perform a risk assessment, identification of the risk. This particular chart is given of control risk, detection risk, and audit risk, which we already understood, okay, from the way of umbrella. Audit risk component, inherent risk, we discussed that. Control risk, we also discussed. Detection risk, we discussed. Interrelation of the internal risk, audit risk components. So inherent, control, which is a combined risk of material misstatement, and you have a detection risk. So how they together work, we have already understood with an example of the umbrella image. The formula, mathematical formula, again we saw that elements of the audit risk, the same way we discussed, inherent risk and control risk and the detection risk. Then you have a SA315 based assertions. We also discussed this one. Then we have understanding of now assessing the risk at the financial statement level and the assertion level. This we have already seen through RCM. Yeah, remember that in previous session we saw an Excel file RCM based. This is something similar. Steps for risk identification, how to identify the risk, assertion level, identifying the degree, that is already being done. We have discussed this one when we discussed the detailed example of the risk assessment, risk control metrics file. Then you have the possible potential misstatement indicators at the assertion level. Some examples are there. Very good example, you should read. Then risk-based audit approach, we discussed that also. Audit risk analysis, that how we need to perform the risk assessment. Okay, general steps like assessing the risk of material misstatement. So risk assessment. Then risk response reporting, that we will cover in next subsequent chapter, the response and the reporting, because risk response is something SA 330 and the reporting will come to that. How to perform risk assessment, that we also saw. Planning, in gathering information at the planning stage. Performing risk assessment by understanding the business. Identifying relevant internal controls. Assessing the risk of material misstatement in the financial statement. Then risk response. We will come to that particular point of risk response when we will see that SA 330. So this is something we will see in detail with SA 330. Also with the reporting part. So reporting, you can say someone is related to the overall audit reporting plus SA 450. Then we understood the internal control, nature, scope and objectives with an example. Okay. So what are internal controls, how their components are, how their nature are. So nature of internal controls, basically performance based, what is the type of what is the nature, basically internal control, how they work. Scope of internal control, like at the division level, at policy level, some we the 3D cube. So one element of the cube that we understood. Then you have a internal control system, like their importance, how important they are. Again, the objective of the internal control, to ensure, to prevent the risk. We understood that by way of an umbrella. Okay, the role of the umbrella to prevent the rain. So that is the objective of internal control system. Limitations of internal control. If I explain you in single word, the limitation of the internal control is the size of the umbrella. You cannot have an umbrella too big, because it will be difficult to handle also. So the size of the umbrella is kind of an limitation to the internal control. You can have a certain size of umbrella. You cannot have an umbrella which can cover the whole city or whole world. No, that is not possible. Again, structure of internal controls. Again, which kind of internal controls are there? Segregation of duty, authorization of transactions. So the structure, how they are defined, we discussed that again as a part of the cube. Then component, again the components as per the COSO, 5 components of the internal control we discussed in detail. So these are the 5 components, and they are explained in detail with examples. So I would recommend you to go through these components detail. Then review of internal system of internal controls. Some portion we have already discussed, that how to perform the review, how to perform the review of each and every component. Okay, but in further detail we will understand in the subsequent section also, that how to identify, how to perform procedures, how to create responses to the risk that we have assessed, to identify the weaknesses, to identify, whether the control are operating effectively at the design level, or operating effectively or not. This particular part again we will cover with SA 330, evaluation, assessment and evaluation. Question is how to assess the internal controls, how to test internal controls. We will see in the subsequent session. Flow chart, everything will be there in the subsequent section. Then beyond that, most of the part we will discuss in the subsequent session. But again, we have discussed some portion on the material weakness and significant deficiencies. So difference between deficiency, significant deficiency, material weakness, we have discussed that. Okay, some portion we have discussed, but some portion is yet to be discussed on that part. Okay, again, that is framework of the internal control. Again, we will discuss guidance note on the internal financial control over financial reporting. We discussed the responsibility under section 143 3I. There is a guidance note also that we will discuss in the subsequent session. COSO framework, again, the same part that we discussed. Then there are other frameworks for the internal control. We will also go through the other frameworks which are there for the internal control in the subsequent session. So this is how, till now, this is what we have covered from your study material. Okay, for chapter 4. Any doubt till now? Any doubt? Any doubt, guys? So I hope you are clear with this particular part. SA 315 and whatever we have discussed till now.
Yes, sir.
Okay. So in the next session, what we will be doing is we will be taking up further. We will be doing SA 330. Okay. We will be understanding how then we need to create a response to the risk that has been identified. How to create, how to decide what audit procedures we will be performing. Okay. We will do all that stuff in the next session in detail. Okay. And now we will take up some questions to discuss on the risk assessment part. Okay, a few questions so that we can have a good understanding about the topic now. So just let me bring that question just a minute. Just a minute, let me bring up some questions to discuss. Sorry, there is some system issue. Which why it is not coming. Okay. Basically, we will see one good question on SA 315 itself that that will give us a clarity about this particular part. So there is a case study, and we will see a selected part of the case study, not the full case study, but a selected part. Mr. Kannan, in charge of auditing of accounting estimate in the audit team, inquired with the management of Durable Consumer Goods Limited, a listed entity, about the basis of revising the warranty provision calculation retrospectively in the current financial year. As per the management, they assessed the warranty claims for the last 10 years, compared them with the sales for that particular period. They identified that the basis or ratio used earlier to book the warranty provision against every sale was inappropriate and less than the actual warranty claims booked in that particular period. Earlier, the management booked warranty provision at 3% of the product sale value. However, based on the revised estimation, management retrospectively increased the provision by 2% since FY 2021. This resulted in additional warranty provision impact of 25 lakhs in the current year and 20 lakhs in the each previous 2 financial years. Accordingly, the management restated the liability in the balance sheet as on 31st March 2023. An adjustment was made to the retained earnings for the amount pertaining to the prior periods. Also, the following disclosures were made in the financial statement in the notes to financial statement. This is the disclosure of note 22 warranty. That is, during the year, management hires push consultant who identified that the warranty provision created at 3% of the product sale value was not appropriate and less compared to the actual warranty claims received by the company. For this, company with the help of push consultants has analyzed the data for the last 10 years and has reinstated the warranty provision of the previous 3 years. Accordingly, necessary impact are provided in the financial statement to reflect the same. Mr. Kannan inquired with the management to understand the re-estimate process and provide a basis for the identified and assess the risk of material misstatement for accounting estimates. During the inquiry, Mr. Kannan identified that the management hired push consultants who look after all the estimates required in the financial statement. As per the management, push consultants were expert in the field of estimates, and hence Mr. Kannan should review directly the working paper of the push consultants instead of performing other procedures. So that was management, that they were saying that instead of performing other procedures, you directly review the working papers of the push consultant instead of performing procedures. That was management was saying, because they hired the independent expert. And subsequently, Mr. Kannan concluded that there is no need to perform further risk assessment procedures as push consultant handled everything and there is no high risk of material misstatement in the re-estimation process. Hence, Mr. Kannan decided to inspect the working papers for the re-estimation calculation and for the disclosure of the impact of the warranty provision by the push consultant. Now, let's understand this particular question. There is one question on this particular part. Let's understand this. As per the technical reviewer, because this file was selected in the quality review, okay, as per the technical reviewer, performing risk assessment procedure and related activities by Mr. Kannan should have reviewed the outcome of the accounting estimate, including the prior period financial statement. However, Mr. Kannan reviewed the working paper of push consultant during substantive procedures, and that is sufficient as per 315. Kindly guide Mr. Kannan with the correct approach by selecting the correct option. Okay. So here, technical reviewer is saying that the risk assessment procedure should have reviewed the outcome of accounting estimates. So this is combination of SA 540 what we had discussed and SA 315. But Mr. Kannan reviewed the account work papers at the time of substantive procedures. You tell me what is the appropriate audit procedure or what was the appropriate way of reviewing the this particular part of re-estimating of the warranty provision, whether this was supposed to be performed at the time of risk assessment or whether this was supposed to be performed at the time of substantive testing. I'll go to the question again, read the question for a minute and then tell me. So while reviewing the work papers, they reviewed the methodology adopted, data is accurate, assumption used by expert, that is there when they reviewed the working paper at the time of substantive testing. But at the time of risk assessment, they decided no need to perform further risk assessment process. So what is correct approach? To review the work paper at the substantive stage or to perform the risk assessment procedures?
Risk assessment stage, sir.
And why so? Why cannot I just go for a substantive?
Sir, at the time of risk assessment, I am checking whether the assumptions and policies and procedures that have been employed by the management are appropriate or not. Based on that, I would select the risky areas or material misstatement, risk materiality limit. I will decide that time. In the present question, the question says that the revision in the estimate they are doing the retrospective accounting is not appropriate because revision in estimates calls for prospective accounting.
Okay.
Be major part for deciding my risk in an audit.
Yes, very good. Absolutely correct. Yes. So here I have not performed risk assessment procedures. Rather, I have, relied and reviewed the work paper directly at the substantive. If I have not performed the risk assessment procedure, how can I identify whether this is a high risk area or a low risk area? How much detailed I need to perform the substantive testing? How much in detail I need to review the controls? Without risk assessment, I cannot understand this part. As a result, it is necessary for me to perform the risk assessment procedures. Without risk assessment and directly going to the work papers will not give me any comfort, because I never knew how much risk is there. There could be a chance of fraud risk. There could be a risk of management bias. There could be multiple risks involved, but I'm directly going to the working papers, reviewing the working papers without understanding the risk. And that is, at times this is happens in the real life scenario also, that without verifying what risk is there, we directly go and check the working paper, check the report of the independent experts that management has obtained. Whether the report of the independent experts satisfy all your risk criteria at all the assertion levels, then only we can say okay, yes. And for that also you need to perform risk assessment. Simple, whether the impact which is given by the management, that retrospectively changing the provisions, is that something is there in the experts report also, that you go and do the retrospective changes, that is directly impacting my account balances and the presentation disclosure level risk, that the presentation and the disclosure of the warranty provision is could be incorrect, and that you will not get sufficient and appropriate audit evidence by just viewing the report of the calculation. That's why it is necessary to perform risk assessment procedures. Clear? Any doubt? Any doubt? Okay, if no doubt, we'll take one question on SA 540 that we have discussed in the last session, so that you could have a revision of the topic also, which is in continuation over here. If you see here, while reviewing the working papers, Mr. Kannan reviewed the following area: whether the methodology adopted is reasonable in the current circumstances, whether the data is accurate, whether the assumptions used by the expert are in line with the assumptions adopted in the re-estimation. So these are the three areas which have been reviewed, which are reviewed by Mr. Kannan. Okay, to review the work performed by expert. Now the question is, as per technical reviewer, Mr. Kannan failed to understand how management makes the accounting estimate and obtains an understanding of the data on which they are based. As per Mr. Kannan, he verified the following. Kindly guide Mr. Kannan with respect to the correct procedure by selecting an appropriate option from below. But rather than not going on to the option, you tell me what missed over here. What Mr. Kannan missed when he was, reviewing, or he was auditing the accounting estimate. Come on. What we have discussed in the last session is on the line of the same. We need to, you need to tell me what was the miss by Mr. Kanan over here. What he missed. Come on, guys. Pretty easy, trust me. Just it's a quick recap of what we have discussed till now in the past session.
Management policy about estimates.
Okay.
And he is using the work of his expert. So in that case, we are not looking into the experts' professional skills, objectivity, and the source data content. We are not checking also.
Okay. Good. Anyone else would like to add something more? So remember in the previous session that we discussed about that what is the things, what are the things that the auditor is required to understand or what is required to check. Okay, when it comes to the accounting estimate, one, it is a method. Second, the relevant controls. Third, if management has used expert, then we understand the, remember how the expert is, whether the expert has that knowledge, that understanding about what is the competency, capability of that expert, underlying assumptions, whether is there any change from the prior period, how that change is impacting. So all these things we are required as an auditor to understand with respect to the accounting estimate, including developing a point estimate or a range to evaluate the outcome of the independent expert. I just cannot review the methodology, data used, and assumptions. It is required to do, but this is not only this is not the things that we are only required to do. There are multiple things. For example, whether the method that is being applied to calculate has been consistently applied. If there is a change, then what is the circumstances that has brought the change? Second, whether the events occurring up to the balance sheet date or the auditor's report date have been considered. Third, whether the assumptions that are used are appropriate or not. Fourth, relevant controls around the process. Data that is used is complete or not only accurate, but the complete data has been used or not. So there are a lot of things which have been missed by Mr. Kannan over here. And as a result, technical reviewer is correct that Mr. Kannan failed to understand how management makes the accounting estimate. Clear?
Sir,
Yes.
in such a approach of answering, do we have to give reference to the professional misconduct as per
If it is asked, so in question it is like kindly guide Mr. Kannan with respect to the correct procedure. In that case, if it is asking, question is asking only to give the correct procedures, no need to refer to the professional misconduct. But if it is asking what is the liability of the auditor and what auditor should have done in case of the liability, you may refer. So based on what is asked, you need to add up the professional misconduct or other things.
Okay, sir.
Any further doubts? Any doubt, guys? Okay. If no doubts, then there are multiple questions that we will also solve in the next session, because once we'll complete essay 330, once we'll understand the evaluation and the response to the assess risk process, then we will be better equipped to answer more detailed questions. Okay. So till now, we keep till here. Okay. In the next session, I will discuss rest of the past for the question, chapter number 4, and we will discuss essay 330 and some portion of essay 450. Okay, so you please read that part. Please, come up with the queries if you have any, and then it will be easy for you to understand the whole chapter. If no further doubts, we keep the session till here. Okay, guys. So please read, revise whatever we have discussed, read in ahead chapter number 4, the rest of the part, and then we will discuss in the next session. Okay, so thank you, guys. Thank you for participating in today's session. I will see you in the next session. Thank you. Yes. Thank you. Good night.